How much do you need to start trading? Man, that's a tough question. I started with like five, $6,000. I had saved up a bunch. I had done a lot of preparation, watched the markets. I had kind of paper traded, which wasn't as sophisticated back then as it is now. You have all the software and these different programs and access, to real time markets. You can actually put in the trades and see how you do. That didn't exist back then. You had to do it all by hand. So, admittedly, it was a little ham hocked, but it was the best we could do at the time. Um, I saved up enough money so that I could buy enough positions. What I didn't want to do was have such a small account where I could only really buy or sell one particular instrument. I know diversification matters even for traders. I also knew that day trading wasn't going to work because of the expenses involved. It was too much money. Again, stocks traded in eighths at the time, so you were looking at an eighth to a quarter spread, and you were looking at about a quarter commission in and out. So you practically needed to see, depending on the name, between 50 cents and a dollar, to make any money or basically to break even. So it was not um, tape reading and doing that, which I eventually got good at. I'll talk about that tomorrow. And scalping, it was much harder back then, again, because of the cost structure and this and that. Too, you have to remember, I worked as a financial advisor, and when you work as a financial advisor, the firm doesn't necessarily care how much you make for the client. You don't get graded on that. You get graded on the number of new accounts that you open, the net new assets that you bring into the firm, and the sum total of all your commissions and fees over the course of the month. Those are the three things that you're graded on. Never does it ever come up like, want to give, Michael Martin a big pat on the back this month. One of his accounts were up 15% with, only a 2% drawdown. Those conversations never happen inside the wirehouse. And that was in a day when you were actually picking stocks. Now everything is wrapped up, and this and that. So what I did do, you have to remember too, like I had clients who I was executing trades for as I was learning my craft from my own money. I was doing very well for my clients, and those commissions added up. So I would pinch off. There wasn't a lot of money to go around because I had, like, I'm sure, I don't know the exact number because I can't remember that far back. But I think it was probably like 1,500 a month rent for Manhattan, which nowadays looks cheap. I know for a fact I had 1,000 a month to pay some student loans back. I did get some academic scholarships, but I still had a lot of money to pay back. So by the time I had my take-home pay, there wasn't a lot to go around. But I knew if I didn't grow the corpus or the account balance just by making deposits in, I was never going to have a grub stake. But man, I know how hard it was. There were times when, after every bill was paid, I'd have $1,000 to last me the month. And that included food, that included dry cleaning, keeping my shoes shined, going to work looking good. And that, maybe taking a client out for a cup of coffee, meeting someone for a beer, meeting a prospect for the same. And so I had to be very, very judicious with where I was spending my money because there was just not a lot to go around. But I think in today's day and age, if you had, I've spoken about this a few times, 5,000 is not a lot. I mean, because what ends up happening is it is a lot of money. Look, I carried golf bags. I remember how excited it was to see a $100 bill. I come from a working class background. But what happens is when your account's underfunded, you start doing bad habits. Again, I'm going to talk about scalping tomorrow, but for the most part, you're relegated to looking at one or two instruments, probably those mini contracts or what have you, because that's really all you can afford to do is put up that type of margin. You're probably also hyper vigilant of the amount of money, so you're being overbearing and watching, hawking, and stalking basically the trades, because every little tick really affects your account balance, right? If you have 5K, $50 is 1%. And so it's too easy to be down 5 or 10% with a small account, and that could really affect you mentally. So you start to develop these bad habits that don't really serve you, but because you're emotionally a wreck, because you don't have enough money, you start doing them because you don't know what else to do. Now, I know that because I kind of did that too, but I had to learn to keep an inventory, not necessarily a diary and not even a journal, but just keep a mental note of my behavior around my trading so I know what I knew and I would learn what to eliminate. And watching the screen all day wasn't really good for me, because I could see and feel every tick. So what I would do is I'd put my trade on, I'd put on a protective stop and let it go. And I wouldn't sit there and stalk the trade all day, and watch it. That brings up another point. When you have 5K and you're looking to take, risk $50 to make 150, tell me at the end of the week what you're making, and compare that for all the hours that you put into minimum wage. Now, I know you have to put time in to learn your craft, but you need to keep track of that, because I get the emails and the comments, more emails, not comments on YouTube, because the emails are more private and I don't kiss and tell. But the majority of the emails I get are like, man, I've been struggling trying to scalp with 5K for 3 years. And at that point, it's like, man, you got to give up, or you have to try something else. Like that's not working for you. Like, to do that in the short term, you need to have a very, very good feel. I know, again, you could look over the shoulder and watch the folks who are really good at doing it and understand it intellectually. There's no doubt about that. So when they tell you, the marketers, that you can learn how to trade, that's true. But learning how to trade doesn't mean that you can trade. There's a huge disconnect there, right? And you don't know it until you've tried it. Why do I know that? Because, again, I get emails from people who've bought every damn training program under the sun, and the response is typically like, it didn't go as easy as they said it would in the marketing, right? And if you've got a funny story, you don't have to mention your name, but drop it in the comments, because you all go through that. Lucky for me, the internet didn't exist back then, so I didn't have to fall victim to all the fucking bullshit that goes on with what I see through Instagram. And now that's AI, like, they'll find any new hook to try to separate you from the money, especially if they could make it a recurring, what they call an evergreen, continuity business, right? Those are membership businesses are called continuity, becomes annuity income for the person putting the show on. It's like anything else. So I took my money and I divided it up 4 ways, looking even at blue chip stuff. They weren't sexy names because there wasn't a lot of sex appeal. Technology was not a big deal back then. And if you traded NASDAQ listed stocks, those were considered very, very risky, because they didn't have the listing requirements that New York did, meaning the New York Stock Exchange. So, you had AOLN, which was the first ticker for America Online, which was traded, on NASDAQ. You had, Microsoft, Apple, Intel. There were a handful of names, but it wasn't as prolific. Even some of those companies like Cisco or Sun Microsystems that eventually became bigger players during the dot-com era were small, risky stocks, post IPO stuff. So you had to be very careful. And I can remember having like JetBlue Airlines and trading Wendy's, stock, or buying McDonald's at 25. Like, I needed to stick with quality because I didn't know anything. Like, I didn't know any better. And I didn't want to lose money for doing really, really stupid things. I knew that much. So with 5K, I tried to divide my money up into 4 pieces, and I'd put one piece to work, and then if it worked out, I would add to it, and hopefully catch the trend as best I could, even if it was for just a couple of days, couple of weeks, because then I knew I could pay for the commissions, because I was smart enough to know that I knew that I was going to have to pay for my losers out of my winners. I didn't want to go into drawdown and just take down all my cash. And so I continually added. I traded, I lost, I certainly learned. So, I kind of said it before. I feel like with the trading, the way I was doing it in a very, very mindful way, I did have a knack, but I had to eliminate, right, things in order to get to where my skill was. And I was lucky. I was very, very lucky. I was born with a skill. I have a really good memory. I had a lot of things going for me, but it was only going through all that trial and error that helped me see, how to really do it and make money at it. And that was really a process of elimination. I talked about a lot of those yesterday. There's probably a bigger list. But go back to the story, I kept adding to my account, even if it was $200, because it was the discipline and the intention of doing that I would add, because I was committed to my craft. I wanted to learn my craft and learn as much as I possibly could. And then after 3 years, after I got really, really good, I took a look at seeing like where my if I looked at how my gains in my client and my own account were compared to the commissions and fees, I did the math under a 2 and 20 structure and found out I could make 6 times more money if I took profit allocation, which wasn't permissible inside the firm. So I left. I started working for myself, and I've never looked back. But every month when I had a little bit extra, I would put that into the account, and I would never mix my savings and my trading. You can't trade with scared money. If you are, laid off, or your job was eliminated or whatever, and you think you're going to just take a pool of capital and trade it and pay your bills out of your trading because you've listened to some marketer, I don't even know who that is, but you can't do it. You're going to always be trading with scared money. You're better off saying, I'm going to take, I don't know, I would say minimum 6 months of your overhead. That means if you had 25K and you have 4,000 a month overhead, you really don't have enough to trade. You don't want to have to worry about paying your bills, because I promise you, you're going to do really, really desperate things. You'll try to sell options. You'll sell puts just in time for a big correction you'll get delivered against when you were counting on all that money and those options expiring worthless and going into your account and then sweep it into your bank account. I would keep it separate and then fund your account a little bit over time. Sometimes for me, if I had a really, really good month, I could put in $500 to $1,000. Other times, I only had $100 to $200. And I'm sure sometimes it was even as bad as 50. But I wanted to instill in myself having the discipline of adding it and making that commitment to my account. But times were lean. And when the losses hit, it affected me too, because then I was like, man, I don't have a lot of cash to go around. My lifestyle choices are completely humble and very, very frugal. I wasn't cheap. I had whatever I spent money on, I bought the best stuff. I had custom made shirts. I had Armani suits, and because you had to look the part. But so that was the investment in my career on that side of it. As far as, funding the account, it wasn't until you get to like 10K that you got some breathing room, where you're not relegated to have to just trade one particular style or one particular contract because you can't afford the margin or Reg T on trading certain stocks. So if you're in that spot and you're struggling, be kind to yourself, but also you have to be realistic and be very, very practical in that this is, trading for a living, especially on the shorter term time frames. I'll be bold and say it's really for people who have money. It's very, very difficult to start in this business if you're broke and go from rags to riches. I know there's someone will do it, just like someone won the $1.8 billion Powerball. More power to them. But I get the emails, and I know that if you're an underfunded account and you're going to try to scalp or day trade, it's very, very difficult. I don't mean to sound this way, but someone's got to be honest with you. I know if a handful of people do make it, my hat's off to them. But that's where the greatest amount of failure is, because that's where I think most people go try to trade. And they find out the hard way that the daily data, the intraday data, is the most random data. So to make important trading decisions looking at data that's kind of flaky, like the flakiest person that you're putting yourself in a tough spot. So don't be angry if you bought into the story. It's a lot harder than you think. And saving money along the way is probably going to help you a lot more, rather than saying, I have a funding account and I'm just going to go with this finite amount of money and I'm going to look at it like a call option. You want to continue to add to your account to give yourself the chance, because you are going to lose money, and you want to give yourself a bigger opportunity to look across many, many, many more names, as opposed to looking and trying to trade just one particular instrument. If you like this video, check out this one.